Hello, good evening, everyone. Good to see you. My name is Alex from MarketWise Asia. Thank you so much for being here and being on time today. Okay, so as usual, today it is a Friday evening, 12th of August 2022. All right, so if you guys can hear me loud and clear, please say a hi to me in the comments or in the chat. This session is broadcasted to both YouTube and also on Facebook Live as well. Okay, I can see some comments already. Let me take a look at the comments right now. I hope you guys are having a good Friday evening. Okay, so hello, Han Hock, So, Lam Su, MH, Kenny, Kok Leong, Keen, Susila, all right, Polling, SP, ZJ, Pei Wen, Catherine, SY, Yang, okay, 1B, good to see every one of you here. Okay, so right now it is just on time 11:33 p.m. So I think there'll be more people who will be streaming in. So just give them a few more minutes, okay? So yes, I can see your comments. Stephanie, my good friend, is here. Mr. Red Shirt, okay. Mary, Ching Sen, okay, good to see every one of you here. All right, so let me, while we wait for the people to come in, let me share my screen right now. Okay. All right. So as usual, disclaimer first, whatever I share today, it is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. Okay. So my opinion doesn't mean that I'm right. So please do your own due diligence. All right. So before I kickstart this session, right? Okay. So just to let you know, even though that the NASDAQ Trading Festival has been over for, I think, for about 3 weeks already, but okay, NASDAQ, all right, at the time I mentioned that we have a virtual booth where we will share with you, all the options content. In fact, this NASDAQ options education, right, we have this video on demand. All right, so I will share with you the link over here, and I will share with you, let you take a look at this site first. Okay, so this is the site, okay, NASDAQ options education. I'll post the link in the chat and also in the comments. All right. Okay, Pat say profited BPS from XBI. Okay, fantastic. All right. So in case you're watching this on a replay, you should be able to see this link on the screen right now. So it's marketwiseasia.com/NASDAQ. Okay, very straightforward. And if you can see on the comments, right, I already posted the link one more time. All right, so all this is where we provide you all the fundamentals of options. Royston, all right, from one of the speakers at the NASDAQ Trading Festival also has 2 videos on the options. He covered more on the strategies, right? Strategies. Okay, so 3 safe option strategies to execute today. Let me comment banners remove. All right, so how to supercharge gold stocks. For me, I'll cover the fundamentals of options, like what is options, stock trading versus options trading, call and put, options buying, options selling. And for those who remember, we have Tony Zhang from Options Play. He also spoke at the recent NASDAQ Trading Festival. He also has 3 videos. All these are free for you. Articles, content. And if you subscribe to NASDAQ, in fact, NASDAQ Market Data News, which is actually their newsletter, right? Just subscribe, okay? Fill in your details, okay? And in fact, there are some forms to fill, but very simple one, okay? Just fill in, okay? And you have access to 2 bonus video where, they talk about the hedging of options and also comparing the NASDAQ and the S&P 500 options, okay? How to trade the index options. So all these 2 are more of the advanced video. So very simple, just subscribe to this APEC Market Data News and they will send you the 2 bonus video. Once again, for those who just join me, I'll post the link in the comments. So it's free, so please go ahead and go through this video. It is free. All right. And I can see that, even though I have about 200 people in the room, I only have 22 likes. Can you just give me a like, share, or comment? If you don't want to share, it is fine. At least just give me a comment. At least give me a like. Liking is free, doesn't cost you money. Okay, just give me a like. Okay, if you can share, that's the best. Do engage with me. All right. So, and also tell Facebook and also YouTube that you want to see more of my content. MarketWise Asia content in the future, because if you don't do that, their algo will kind of mess up the day, and they think that you don't like my content, and they'll start showing you lesser and lesser of our feed, okay, on your Facebook page already. So just give us a like, a thumbs up, okay? Fantastic. I can see more likes already. For those who are, still deciding whether to give me a like or not, doesn't matter. Okay, if you feel that you find value in my Facebook Live or in the YouTube streaming, right, at any moment in time, just give me a like. Okay, I'll appreciate that. So enough about that already. Let's kickstart the session right now. So of course, today's session, I'll go through with you. The market has been surging after the CPI index, right? I think this is already old news already. Okay, so I mean, by now you should know, but for those who don't know, all right, the inflation data actually come down the percentage. All right, so yeah, previous last month the inflation rate is actually 9.1%. So this month, not this month, and in fact the CPI released on Wednesday, August, is actually for last month, July. It is actually for July, so it's lagging. So they expected 8.7%, but of course it is 8.5%. So this caused the market to rally, okay, even higher, okay. So can the market continue to go higher or not? I will share with you my views later, okay. And of course, if you have been watching my Facebook or YouTube, right, you should realize, I have been mentioned, right, secretly bullish. So if you have been holding on to some position, be it some swing trade or position trade, right, you should be pretty profitable until now, right now, okay? All right, if you have been profitable, just type me or yes in the comments. Of course, I think the one that I really publicly say out, okay, it is actually the biotech, and it has been giving me decent profits as well. For biotech, I already exited, just in case you don't know. I already exited, okay? So I feel that, market is kind of overbought, but can the market continue to go higher? Yes, it can, okay? The market can be irrational, but as I mentioned in my Telegram channel, right, it is actually the risk versus reward is actually not so good right now, okay? In case you don't know about MarketWise Asia Telegram channel, so this is our Telegram channel. We have about 5,300 people in the room. So if I share with you my views, commentary and such, some of it I've not posted. I will not be posting on the Facebook page as well. So if you want to subscribe, right, do head over to the link below over here. All right, I'll post the link in the comments also. And you can also see the link in the scrolling bar. All right. Okay, so yeah, and let me see. Yeah, so I want to show you this also. This is the forecast. This is the forecast over here. Is it this one? Yes. Okay, you guys can see my screen, right? So this is actually the forecast by the Bank of America. Of course, right now the peak is 9.1%. So moving forward until the end of the year, okay, BOA in fact forecast that we'll go to about 6.1%. Okay, I think it's about 6% plus. Okay, 6.1%. 6.1%. Let me see. Can I draw this? Let me see. Yeah, I think about 6.1% until about end of the year. Right, about there. Okay, so about 6%. All right, so moving forward, they expect the CPI, the inflation, to continue to go down. So as I mentioned also in my 1 month ago or a few weeks ago, my forecast, right, I said that I expect the CPI data to come down also, but I expect the inflation rate to stay elevated. So elevated, it is 7, 8, that kind. So right now we are still elevated. All right. So it is still not going down. It is still high. In fact, if you show this number, I think in early of the year, I think people will freak out. Okay, but because we have already anchored, okay, anchored as in anchor ANCHOR, anchored at 9.1%. So anything below 9.1%, people will think that, hey, we are actually not so bad, right? We're actually still pretty good. So that's it's kind of irrational, right? But nevertheless, we are still anchoring to 9.1, okay? But 8.5 absolute number itself, it is still higher, but because of the anchoring effect, and people just, hey, we are not so bad, the market just rally, Yeah, so CPI data by BOF is actually 6.3%. So let me go through the chart right now. So as I mentioned, right, the commodity prices, just a recap, commodity prices are already giving clues, I think about 1 month ago. Okay, so right now, what do the commodity prices giving us a clue again? So we shall go through that again. So let me just a very quick recap right now. So previously, I was looking at this DBC. DBC is the broad-based commodity index where they have all the oil, heating oil, natural gas, metal, grains like corn, wheat, so everything. So it is a broad-based commodity ETF basket, right? Commodity broad-based ETF basket. Okay, so in fact, as I mentioned, right? So last month, June, starting of the June, it is over here, this vertical line over here. All right, this vertical line over here. So, right, as I circle over here, right? So it is June. So as I mentioned, right, it takes about 1 month lag, okay, to so-called to show in the CPI data that actually is coming down. So commodity prices came down. All this I mentioned before, it is nothing new. It is just a recap for those who are still new to me. All right, so this is just a recap. So price came down already. So the CPI release on Wednesday, August is actually for last month, July. So June starting to come down. That's why July, the CPI data reflect that it's actually coming down. Okay. All right, but how do I know this? It actually, you can do it also. It is actually comparing to the inflation rate. So that's why I know that, I can add in this, what's it, US IRYY. Okay. All right, I can add this comparison. All right, this USIRYY ticker on TradingView, you just do a comparison. All right, you can see that always, right, there is a lag. Okay, there's a lag. Okay, there's a lag. This is the inflation. Can you see the peak first? Okay, actually the commodity prices peak first before the inflation. So the lead time it is about 1 month. About 1 month. About 1 month. So if you scroll through back in various data point, it is I already highlighted, okay, but it is also about 1 month, okay. You can go through, compare it yourself on your trading view chart. I'm not going to go through that again. So lead time is about 1 month, okay. But right now the commodity prices is already at a low, okay. But commodity prices, okay, cannot, as in prices don't go down in one straight line, okay. So let me go back to my chart again. So for example, I'm going through DBC once again, right? So naked chart, okay. It just went one straight line down, right? Okay, and right now this broad-based commodity DBC is hovering. It's like it is consolidating. So in fact, actually this look like a flat pattern to me. Flat pattern meaning that it's a continuation pattern where it is like a flag, okay, like a flag like that, right? And then continue to go down. So will it continue to hit down like that? Okay, actually nobody knows, okay. But price has been coming down, and the oil is down 30% from the high. DBC, it is down 18%. So DBC from the top, okay, from the top to the bottom over here, it is about 18-19%. So this inflation peak thesis has already worked out. So inflation came down, okay. But okay, what I'm to cautious you today, okay, the main gist of this Facebook Live, all right, the 30% decline in the oil in the last 2 months, right, give us the reason to be cautious of a potential reversal. As I mentioned, right, this is the oil over here, oil. Let me go back to the oil chart. Okay, this is the crude oil futures, WTI futures. So from the high in June, to the low over here, it is down about 30%. It is down about 30% already. Okay. Can you see that this move is actually quite impulsive, right? 30%. And based on statistic, right, the average drawdown following peak inflation was about 21%. Okay, see the chart. This is, I get this data from elsewhere also. This is not my own data. So I get this from Game of Trade, one of the site that I always walk through also with myself. So this is, you see, can see the average change in commodity prices 9 months following the peak. Okay, normally you drop about 20%. As you can see, this is crude oil, drop about 20%, okay? And right now we have already dropped about 30%, and the inflation has already came down already. So if you add in my usual indicator like the cloud and the central pivot range over here, all right, on the daily time frame, no doubt, okay, we are in a downtrend for the crude oil price below the cloud and below the central pivot range. Okay, these are the green dotted lines up here. So below cloud, below CPR, it is a downtrend. All right, but if you actually zoom out and go into a higher time frame, the longer term time frame, all right, this is the weekly time frame. In fact, we have corrected actually quite a bit. Okay, as I mentioned, right, this is a kind of a normal pullback. So, oops. All right, so you can see that crude oil on a longer term time frame. All right, we are still above the cloud. All right, we're still above the cloud. So it is still overall in the long term, we are still in an uptrend, but price has corrected a bit and hit a R1 resistance. And this time round, based on the weekly time frame, it looks like a false breakout to me. So you can see over here, right? This is the previous prior swing low over here. This is a prior swing low over here. Prior swing low. Price do a false breakout over here, and this has prompted many people to go short. Okay, for those who are doing a breakout method, the short seller will go in. Okay, the short seller will go in. But after 1 week, price cannot go down further, but in fact reverse back up right now. All right, so if you drill down to the daily time frame, okay, this is actually what happened. Okay, so this was the prior swing low over here. Prior swing low over here. All right, so you can draw a horizontal line over here. This is based on this is horizontal line. So can you see over here now? This do a breakout trade, price cannot go down further, and then price reverse back up again. So many short sellers are trapped over here, and I suspect within the next maybe, I don't know, 1 to 3 weeks or so, maybe not 3 weeks, maybe 1 to 2 weeks, maybe 2 weeks time, I expect there could be a technical rebound in the crude oil, right? In the crude oil. So maybe moving back to the central pivot range over here. So they're about at about $100, at about $100, back to again $100. Okay, so if you understand what I'm trying to say till now on crude oil regarding the oversold and there's a potential for technical rebound, all right, just type 100 in the chat. Okay, so it is like, for example, like Pat say that XLE seems reversing, right? So this is true. For the past, I think 1 week or so, the energy sectors, energy stocks has been rebounding. And for me, personally, again, this is not a copy trade or what. Okay, this is just my personal view. All right, I could be wrong. I actually went in for a long crude oil. Okay, I went go long on crude oil. All right, not directly on the crude oil futures. I went into the USO. USO is the ETF, right? So the reason it is actually very simple. So can you see that? Okay, not only it is a false breakout over here, this is also a wash and rinse pattern over here. All right, this is the wash bar. All right, and then this is the rinse bar over here. Okay, so the market fake you out and then reverse back up again. All right, and this is also in line with my thesis that there could be a potential rebound in crude oil because it is grossly oversold already. Okay, and yeah, and based on the higher time frame, we are still on a longer term uptrend. Just that short term wise oversold, there could be a rebounding potential. So right now, I'm still holding on to this crude oil trade. I'm using USO as a proxy. USO is the United States Oil Fund proxy. All right, so I'm still holding on to this trade over here. But of course, if you are looking at crude oil, the chart itself, I will still refer back to the crude oil chart. Okay, USO, it is just a execution for me to enter into a trade. Okay, using ETF as a proxy. Okay, so this is my personal view over here. All right. So again, okay, for oil prices to drop even more, I think there need to be fundamental reasons, lah. Okay, right. One reason could be the war to fade, the U.S. Not U.S. the Ukraine and the Russia war. It is still ongoing. It is still ongoing. It is just that the media doesn't actually talk much about it anymore. So it is not the flavor of the month really. It is old news. It's not interesting anymore. So that's why they are not showing you this news anymore. Okay, one reason, okay, for crude oil price to drop even more. The war cease, then crude oil could drop even more. Okay, another thing I think is more important is that if the economy continue to slow down more than expected, okay, that will cause the crude oil to even go down. So crude oil is actually kind of self-limiting, self-limiting, okay, because if you increase oil price too much, there's inflation and such, people don't want to consume much, everything slow down, hiring, everything, it's not continuing, everything. Then when demand slows, right, then nobody want to less demand on the oil. Everything just is a feedback loop, continue to go down. So when price go up too high for crude oil, then everything will come back down again. Okay, and recently there's a recession kind of a hot topic, right? So this will cause the economy to slow down even more. And if the economy continue to slow down, that will cause the oil price to continue to drop even more. All right. So this is this. But if you're asking me about that, right? So yeah, short term wise, I think price can go up, lah. Okay, but longer term wise, whether about the fundamentals on the recession and such, I seriously have no idea really. Okay, so right now for me, everything I talk is about swing trade, swing trade. Okay, short term trading. Okay, not so short as in intraday, lah, but swing trade holding for a few days to a few weeks, that kind. Okay, if you want, can do position trade, that kind also can, but I'm not talking about the long-term view one. Okay. Long-term view, I have absolutely no idea. Okay. Yeah, all right. Can. So everything's okay. Just type okay in the comments. All right. So, okay, talking S&P. Okay, but talking about the recession, since we are in the topic of recession, I'm also also prepared something. Okay, recession imminent or not? Okay, is it going to come or not? Okay, I don't know how about your view. If you think we are sure to have a recession, okay, all right, or what, right? Just type yes in the comment. Okay, how about that? Okay, how about that? I make it simple. Do you think a recession is for real? Do you think the recession is actually really coming? If you think the recession is really coming, okay, just type yes in the comment. If you think everything is okay, everything is still good, okay, no recession and such, right? Okay, just type no in the comments. No in the comments. All right. So meanwhile, you are typing your yes and no, right? So do remember to give me a like, share, or comment right now. We have about 250 people in the room right now, okay? Be it on YouTube or also on Facebook, combining 250 people, okay? We have only about 80 likes only. So give me a like, share, or comment. Liking is free, doesn't cost you money, okay? If you think I'm providing value, and if you think that you want to let Facebook know that you want to see more of our content in the future, okay, do engage with us, give us some like, give us some comment and such. So in the future, Facebook will give you, you'll show our feed in your Facebook feed, all right? So let me see, to look at the comments over here. Yes, Henry, yes, everything, yes. After I see no, yes, no. Okay, Kenny said Larry William forecast. No, so confirm I know you watch our Nasdaq Trading Festival by Larry. So Larry said yes, but I mean, this is just his personal opinion. I'm to really show your own feeling, okay, your own gut feel. Do you think recession is coming and such, all right? So some yes, some no. So it is actually still quite divided. Still quite divided. Okay. All right. So back to this U curve again. Inverted U. All right, inverted U over here. So I mentioned before a few times also. So again, just a recap only. So this is the U curve, 10-year minor 2-year U. All right. So we are still inverted. We are still inverted. So the dotted line here, it is the zero line. So we are still inverting. We have inverted. So if you look through the past history, when the yield curve inverted 10-year minus 2-year, right, after a period of time, it seems that the recession is sure to come. All right, so let me find the chart again. 10-year minus 2-year treasury yield spread over here. Okay, I found the chart. Let me go to here. Okay, so this is the 10-year minus 2-year yield. Can you see that? Every time there's inversion of maybe ignore the 1980s because of the oil embargo and all the oil crisis. So it's a bit messy. So 1990, all right, after the yield curve inverted, I think about 1 year later, there's a recession. In the dot-com crisis, all right, after the yield curve inverted, there's a recession over here. After the 2000, this is 2006, okay, yield curve inverted, I think about 1 year or so, or 1.5 years or so, then the market actually crashed also. Also, there's a recession. The latest one is during the COVID crisis, okay, you inverted. So right now, we are also inverting right now. So again, there's a mixed view over here. Larry say everything's good, okay, based on some of the data he actually used, like employment and one utilization capacity. I forget already. Is it? He also, I think last week I mentioned. I think 2 weeks ago I mentioned, okay, some capacity. I also forgot already, okay. But yeah, because it's not something that I always look at lah. So I need to refer back to my own. I need to refer back to my own YouTube live. Okay, so yeah, so Larry will say no. So this is just for you to go through yourself. But back to this link over here. This is the New York Fed, New York Federal Reserve over here. Okay, so the probability of the recession, all right, I mentioned that previously also. Previously was at about 6%. Now has increased tremendously to about 17.62%. Okay, 12 months ahead, which means that there's a likelihood that by next year, June 2023, there's about 20% chance that we are going into a recession. So previously, this is updated on the 10th of August, just 2 days ago only. So previously, I mentioned that this side over here. Okay, so this is a macro me. It is the same data. It's the same data. Okay, so previously, also the 10-year and the 3-month treasury yield, 5.93%, about 6%. So right now has increased to about 17.6% chance. Okay, 17% chance. So Hong Wen say, right, the current strong economic data is a bit contradicting. Yes, okay, this is also what I'm thinking also. It is a bit contradicting. Employment, it is still strong, unemployment rate is still low. Everything, seems it's still okay. The labor market is still very tight and such. This is quite good. The consumer sentiment also actually increases recently also. So let me show you. I think going to the Forex factory. So actually just now at 10 p.m., all right, so there is this preliminary, all right, University of Michigan, this is consumer sentiment. So it is, I know it's a bit small, but okay, actually doesn't matter, okay, doesn't matter. Okay, I can zoom in. So expected was a 52.5, but right now it is about 55.1 reading. So let me try to find that again, consumer sentiment index. Trading economics. All right. So this is the latest data also. So prior to that, it's actually dropping. Can see over here, but recently it has been increasing. So the consumer sentiment is increasing as well. Labor market is tight and such. So yeah, can be a bit contradicting. But if you are judging based on the yield curve, so yeah, that within the next 6 months to 1.5 years, we might be heading into recession. So this is one nobody knows, because no economist can give you an actual answer, all right, until it happens. Okay, so yeah, but what I want to tell you is that, okay, the important thing. So important thing is, okay, it doesn't matter right now, okay, because when the yield curve inverted, right? Okay, inverted, right? I mentioned a few times also already, it is not immediate. Doesn't mean the market will drop down like that. So you take some lead time. The lead time is about 6 months to about 1.5 years. Okay, typically it is about 1 year, like 1 year. All right. So we still have a runway of about 1 year or so. Okay, don't quote me, that price might continue to go higher. All right. So I covered that on the recession probability, it has increased tremendously, talking about the commodities and such. All right. So I'm going back to the S&P 500, the indices. Okay. So last week with Kayo, I mentioned that the S&P is now trading above 15% from its June low, and NASDAQ about 20% higher, right? But right now, the S&P is trading about 17% above the June low, and the NASDAQ is doing even better. It is up about 23% right now. Okay. So let's go to the S&P 500 chart over here. Oh, so today it is still extremely bullish over here. So right now the market, it is up about 0.7% for the S&P. For the NASDAQ, it is up about 1.16%. Okay, so just a recap on what I shared yesterday over here on our Telegram channel over here. Okay, so actually yesterday I mentioned, right, the US indices are surging. My personal opinion is that don't FOMO, fear of missing out, go chase and go long now. The risk reward, it is not in your favor. Okay, the market is overbought and over at resistance. Okay, VVIX ratio is also showing signs of divergence. Yesterday, actually, there is a divergence on the VVIX ratio, but today, there's no divergence. Price as in the VVIX ratio continue to go higher. So right now, today, no divergence. So until it is very clear that the stock market continue to hit higher while the VVIX is hitting lower, then right now it is still pretty okay, the market. Okay, but what I want to tell is that as I mentioned, right, the market right now can still continue to go higher. But personally, I feel that the risk versus reward right now, it is actually not very good. Okay, there are a few reasons. So one thing that I'm looking at 1 to 2 weeks time, it is overbought, and it is the market breadth. So we are actually very overbought right now. So the market breadth, all right, you can look at the percentage of stocks above the certain moving average. So we have a broad view of what all the stocks is doing. So go to the breadth over here. I can go to the percentage of stocks above 50 days moving average over here. I go to a line chart over here, naked chart. Okay, over here. So can you see that prior to that, the market was extremely bearish. Then market, stage a rebound over here. So at the time when the percentage of stocks, okay, only 1%. So this is the S&P 500 stocks above 50 days moving average, which means that I think just a few weeks ago, okay, only one stock is above the 50 days moving average. The rest is all below 50 days. Then just 1 or 2 weeks later, all right, a few weeks later, then the market just surged up. All right, so can you see we are heading near towards about the 90 plus, okay, reading ready. Right? Can you see that previously when the breadth reading hit about 93, hit 93, the market will kind of reverse correction now. Okay, a correction, and a correction now. Okay, will this time be different also? All right, based on probability, okay, based on the past historical track record, I believe the runway is a bit short. We are about there already. Right now we are at about 87%, where all the stocks 87% where the stocks are above the 50 days moving average. So right now, if you ask me, you want to go long right now, then I think that it is not very good. Okay, all right. I'm not sure whether you agree with me. Okay, but I mean that of course, short term wise, the market can still continue to go higher All right, but I feel that the risk reward is not there So if you agree with me, just type agree in the chat box. Right. So I mean that you will feel very, FOMO, fear of missing out. You can see, wow, the stock market continue to go higher and such. Of course, if prior to that, if you're already holding on to some stock, then good for us. Okay, like me, I hold a few stocks, then good for us. But if you're talking about if you hold nothing right now, and if you want to buy right now, then I think it is not very good. I think it's TMP. Okay, 头脑派啦. At a low, you don't want to buy. Not at a high, then you want to buy. So if you agree, just type agree. Right? If you don't agree, it doesn't matter. You can just type disagree also. Okay, so this is one reason. Short-term wise, I'm bearish, but longer term wise, I think we are still looking good. Okay, we are still looking good. All right, so let me go to this watch list. Longer term wise, we are still looking good over here. The reason is simply because, let's say for example, for the S&P, all right, we are above the cloud, above the central pivot range for 2 consecutive months right now. Okay, so as I mentioned, right, if I really want to see that the downtrend has turned into an uptrend, a good way to judge, okay, it is when price is above the central pivot range for 2 consecutive months. Right now, it seems that we are going to do that unless within the next 2 weeks we can really, take a very drastic turn and break below the central pivot range again, okay, which I don't think so. So if you want me to, show you how to install the central pivot range indicator and such, right? If you are new to me, I have this YouTube tutorial over here. Okay, so I'll post the link in the comments. All right. So if you got profit now, should sell or not? So ZT is asking, right? So for me personally, I'm more of a swing trade. I'm more of a swing trader. So for me, I'll take profit. Okay, or at least there are a few ways you can do that. Take half of the profit, okay, then throw your stops. If you want to completely take profit off the table, I think that is fine as well. But again, that depends on your time frame. If you intend to hold longer term for holding for 3 months, 6 months, 9 months, it is up to you. Seriously, it is really up to you, okay? But do have a stop in place to protect your profit, all right? You can still hold on to it, but personally, I will take my profit because I'm more of a swing trader, all right? So yes. All right, so where is it? Yeah, okay, back to here. Overall, I think we are still looking good to about 1 year time, price above the CPR for 2 consecutive months, above the cloud. All right. For the Nasdaq, it is the same as well. All right, above the cloud, above the CPR. So it's kind of like we have starting to change of trend over here. So yeah. So again, the immediate support will be at the central pivot range over here, all right. But if you're talking about resistance wise, I mentioned, right, last week or so, I mentioned that we are hitting the resistance, the yearly pivot over here. Okay, but right now, it seems that it has no effect. Yesterday, in fact, there seems price got rejected. There's a pin bar, a shooting star over here. But today, it looks like there's nothing happened. Price continue to hit higher, all right. But if you actually know me, if you actually watch my Facebook live, right, you know that I don't like pin bar. I don't like I don't like shooting star. Okay, because most of the time it is actually a fake move. So this pin bar will make a lot of people trying to short the market. Of course it didn't break the low, but there'll be people who enter just purely on the pin bar itself, and then price will continue to hit higher. So I suspect price might break the high of this pin bar over here. All right, and then I don't know, by the time also maybe the percentage of stocks above the 50-day moving average might already hit about 90 plus percentage, and then price maybe could come back down again. So that's the scenario I would prefer to see, or price hit the R1 level and then price come back down. Okay, so this is the yearly central pivot range over here lah. So this is my my kind of a plan. Okay, this is my plan over here. So personally, I mean that if you want to go short, you can try to, but personally, I won't. So I'm still looking for opportunity to go long. But if you're swing trade, I mean, go long, go short, it is fine. But generally, you know that right now, above the CPR, more bias toward the upside. If you want to go short, right, you need to take a profit quicker, okay? All right, you cannot just thinking that price will like, price will like, well, go back all the way down again. So cannot have that kind of expectation. If everything clear so far, if everything clear, everything okay, just type okay, just type okay in the comments. Okay, do engage with me, just type okay in the comments, or I take a sip of water first. Right now it is still surging higher. So another thing I want to share with you is that this is actually something new that I discovered. Okay. All right, so I mentioned about the percentage of stocks above the 50 days moving average, right? This is actually based on the whole market at the whole S&P 500, right? Per annum. Okay. I want to share with you is this site called the barchart.com, where it will show you the individual sector. Okay, so I'll post the link in the chat. You guys can see, right? Okay, can see, so this is barchart.com. I'll post the link in the comment. So not the chart over here, it is over here. Okay, so this is percentage of the large cap stock, which is the S&P 500 above their moving average. So it can subdivide into the S&P 500, consumer discretionary, all the sectors started, all the major sectors over here, healthcare, consumer, everything now. Can you see that the 50-day moving average, right? 89%. It is exactly what I show you, right? So we are somewhere around there ready for the indices. So can you see that overbought all the consumer discretionary is already 93% above the moving average, right? What else? Financial already 92%. Industrial, tech, all at a very high level already. So short term wise, the market is overbought. But longer term wise, okay, for example, the 200 days moving average, I think we are still pretty much okay. We are still moving nicely. I think that there's still room for improvement to go higher. That's why I say longer term wise, I think we are still okay. Sorry about that. So can you see over here, we are still at kind of a mid-range level. All right. So you can go to this barchart.com. You can see this information based on the individual sector over here. All right. So I just recently discovered lah. Okay, how many of you this is something new to you? Okay, I don't know whether this could be, you might already know this. Okay, if you think this if you think this is new to you, right? If this is new to you, just type new in the comments. So that at least I know that you are learning something new today again. Okay, resources. Because prior to that, I don't know about this site. So it's only recently I discovered about this site. All right, so this bar chart. All right, so if you actually click on this, for example, click on the S&P 500 discretionary, okay, then it will show you the oops, is it this? Sorry, clicking on the box itself. Okay, clicking on the box. For example, like consumer discretionary, 93%, right? Just click on the box. Okay, you're brought to this market breadth chart. So this is where you can see the reading over here. And then if you realize, all right, that the code is actually SYTW. SYTW. So you go to trading view, if you search SYTW, Here you can see that the S&P consumer discretionary stock above 20 days moving average. Okay, it is there. So it is 20 days, sorry. So if you go to the 50-day one, 50-day one is actually over here. 50-day one is actually over here. Sorry. I redo one more time. So percentage of stocks above 50 days moving average. All right. Let's say, for example, consumer discretionary, XLY. Click on the box, 93%, right? Then you see this chart over here. Okay, you can do a line chart or whatever it is lah. Okay, line chart over here, you can see that, oh, actually, no, it is performing quite well recently. So about 93% above the 50 days moving average. And you see the ticker over here, SYFI. Go to trading view. You can see that you also have this chart over here. Just click on it. All right, you also get the same thing now. Okay, line chart, you also get it the same as well. So Henry say this is just visited. Just visited. This is very new and interesting over here. Yeah, so I think interesting. This is new. So good to know that some of this information is new to you. All right, so yeah, you can just head over to the site and just check it out yourself lah. All right, so again, to appreciate that, can you give me a like or not? For those who haven't liked it, can all right, so yes. So oops, not this, is this. Okay, head back down. Okay. All right, so I covered that again. So the right now, even though the market it is actually overbought, but the sectors now moving on to the sectors that I'm watching right now. Okay, in recent days, I find that the financials are pretty strong. So the financial sector, okay, this is XLF. It is pretty strong. Previously, it was lagging. But recently, it kind of outperformed the market. And you can see that for the XLF, this is the financial sector over here, all the banks, insurance, everything. Okay, so it was below the cloud, all right. And also recently, for the past 2 days only, or rather for the past 3 days only, so very new, price is actually above the cloud, all right, and also above the central pivot range. So you can see that this is in an uptrend right now, but once again, we are very overbought. Okay, you want to buy, you should buy here, not buying now. But can the price go higher like this? Yes, it can. But once again, the risk reward, it is not there. I prefer, price do a pullback, okay, and then go back up. How shallow or how deep the pullback is before I enter again, it depends on the price action itself lah. So I can't tell you for sure for now. It can be just a shallow pullback and then go back up again, or it can be a deeper one back to the central pivot range and then go back up again. Okay, so but XLF is something that I'm watching right now. So another one they can look at is all the insurance company. Okay, the banks. Insurance is KIE. Okay, KIE, which is not too bad also. KIE insurance also for the past 4 days also keep surging. Right. So it seems to tell me that the money is flowing into the financial sector once again, and in fact, based on a kind of a higher interest rate environment, okay, so this is good for the banks as well. So it's starting to move, okay. But again, this is just the initial strength. I'm not expecting you to go and chase it, okay. Once again, I'm not a chase person. Need a pullback, okay, and then I will see how it goes, all right. So like KBE, right? KRE, regional banking, also pretty strong. All right, KBE is the general bank ETF. It is also pretty strong as well. Okay, all right. So all right. So I'm watching this sector. Prior to that, I'm watching the biotech. Right now, I'm watching the financial sector. So financial sector is XLF. So if you get what I'm trying to say, just type XLF in the comments. So let's watch the financial sector closely, XLF. All right. And then the retail is actually recently also pretty strong. So these are the few things that I'm watching. I'm just telling you now. Okay, telling you now. Retail is XRT, pretty strong as well. Retail, pretty strong. All right, pretty strong. So only the past 3 days, it broke above the cloud and above the central pivot range. All right, so if the market continue to go higher, the market is going to head into a new bull run. All right, then the retail, all these will benefit as well. So because the retail, the consumer discretionary, all these are more like a risk on kind of sector, risk on. So market, they are more willing to spend on consumer goods and such. Time that the economy is okay, that kind, bull market, everything. So everything is okay. But it also kind of contradict, okay? If the market is so bad, recession is coming, then the retail shouldn't be performing that well. But right now, the price action is telling me it is performing well. So as I mentioned, there's a lead time, okay, from now to a potential recession. So trading wise, I'll just follow the price action. Okay, so for retail, there are a few things that you can watch out. It's not just XRT, So I have this I have this ETF list. Okay, you can see that retail, right? Retail, there are a key one. So you can search retail over here. Right, retail, there are a few ones. Let me try to zoom in over here. For those who are with me, you should already have this ETF list. Okay, so like for example, XRT, online, ONLN, I buy ETF lah. Okay, so a few of them are like I buy. Also retail ETF, okay, I buy, and then ONLN. So if you really want to know what you are buying, then of course you have to go and search what does the component stock consist of. Okay, so I won't go through that, but generally, right, if you want to have this list of ETF, all the major, industry sectors, thematic indices, country, commodities, currency, okay, you can go to this link over here. Okay, this link, okay, ETF sector and industrial list as well. So, okay, I'll post the link over here. So this is, by right, you should see this page over here. If you go to this link, okay. Yeah, this is a landing page. Just fill out your name, email address, then you will get this ETF list. Okay. All right. So let me see. Hong Wong type a very long question. If you have sector rotation model at the bottom of the link, where do you think we are really? I think it could be early recession. Hence, maybe but why would real estate do well? Wondering if anyone has any idea on this. Anyone have any idea on this or not? Why is the real estate doing well? All right. Of course, by right, interest rate go higher. The real estate, all this, is very sensitive to interest rate and such as. So technically, it shouldn't do that well. But the XLRE recently also do pretty well. Okay, pretty well. So what's the reason? Okay, personally, I can't tell you why exactly it is. Okay, but okay, follow the price action. So in fact, I also have this seasonality sectors cheat sheet, right? Which I share with you guys during the Nasdaq trading festival, right? Okay, so actually in July, okay, can you see that in July, all right, the real estate sector is actually performing pretty well. So that is like kind of sector rotation based on seasonals. It is actually moving pretty well. So prior to that, as I mentioned earlier, okay, I was secretly bullish. Okay, if you actually trade the real estate, then you'll be good lah. So I don't really trading short term. I don't really focus too much on the macro or the fundamentals lah. So I just watch the price action. So moving forward, if the market continues to go higher, all right, okay, but you need to know that moving forward into September, it is actually not a very good month, not the best of the month, right, in terms of seasons and in terms of the stock market, all right. You can see the energy, in fact, for energy, right, September, it is pretty good month, which means that, you know, my thesis that the energy sector, the oil and gas, right, could be, you know, heading higher in the weeks, in days to weeks to come, could potentially be true, because we are right now in the mid of August already, moving into September soon also. So that could be a potential reason also based on the seasonals. All right. And moving forward, you know, utilities in September, it is moving pretty well. So the rest, you know, the blue one, it is kind of 50-50 lah. Okay, there's not much age in that. Okay, the weaker one is like consumer discretionary. All right. Communication, real estate. Okay. Okay, so consumer discretionary have been moving very well for the past 1 month really. So moving forward, you know, if there's a sector rotation, then I think that, you know, the money might flow, okay, into other industry as well. Okay, so if everything clear, just type clear, type okay in the chat. Okay, type okay in the chat. Okay, all right. So for me, I personally like to look into the strong sectors lah. So that's the reason why, for example, I managed to catch, like, you know, XBI. Previously, I catch on the XBI, the biotech. Okay, biotech. You know, I caught it somewhere around here. All right, and then move up higher lah. Okay, I took profit already. So, you know, moving forward, it is also a bit overextended. But, you know, the XBI generally still looks good to me. But personally, I am more of a swing trader lah. So got profit, I will take lah. Got profit, I will take. All right. And yeah, and then if you are talking about other things, right, like metals, okay, the metals looks to be improving as well. Okay, so like for example, gold, it is actually this lah. Okay, gold. Okay, looks pretty okay to me. The precious metal, I will just focus on gold. Focus on gold. And, you know, it is hovering at a resistance right now, but it doesn't seem to be coming down. Okay, and then if it doesn't come down, I think there's a potential that price could continue to head higher in terms of the a few weeks to go lah. Okay, in the coming weeks or so. So let me take a look at something. Let me check. Yeah, so if you're talking about gold, right? Talking about gold, in fact, for gold, all right, 15th of August, okay, 15th of August, okay, to about 7th of September, for the past 15 years, okay, 80% of time, it is positive. So, you know, there's a high chance that gold might continue to go higher in the coming weeks or so. All right. And then base metal, it is the base metal, this DBB, right? This DBB, what does this base metal consist of? All right. This base metal is actually the copper, aluminum and such. So you can go to etf.com, DBB. All right. You can take a look. Okay. So three base futures contract. The words a bit small, but doesn't matter. So I'll just let you know that it is aluminum, copper, and zinc. Aluminum, copper, and zinc. So the base metal right now hit a resistance. Okay, but, you know, if price doesn't go down lower and continue higher, I think there's a chance that price could break above the cloud. And based on seasonals, okay, all right, DBB actually very similar to precious metal, from the 15th of August to the 8th of September, okay, for the past 13 years, okay, 85% of the time, it is positive. So there's a good chance on that. Also in line with the dollar index. So the dollar index, last week I mentioned that, actually the dollar looked actually kind of weak, right? So after that, price came down a little bit, okay? But right now, right, this is a bit parabolic over here, This is the US dollar. So right now we are already below the central pivot range. Is it still on an uptrend for dollar index? Yes, it is, but it tells me that the uptrend based on the daily time frame, it is actually kind of weakening. It is not that strong anymore. Can you see prior to that, ever since the early 2022, when the dollar index broke out of this range, right? Has always stayed above the central pivot range one, okay? Has always stayed above the central pivot range. Right now, this is the first time price has dropped below the central pivot range. And you can see that, price actually hit the CPR and then came back down. So if you actually do a swing trade, there's profit to be made, okay? But right now, of course, price has reversed back up a little bit, but I suspect, okay, if the stock market continue to go higher in the coming weeks or so, or in the coming months, okay, when inflation is less of a concern, the Federal Reserve is not planning to, so aggressively hiking the interest rate, then I think the dollar might come down because, if the Fed continue to hike aggressively, then of course this will be bullish for the dollar index, okay? But if it is not hiking aggressively, okay, then the dollar index might come down. And if the inflation data, CPI, continue to show that it is coming down, then, the dollar index might continue to head down lower. And this in turn, okay, will boost the price of the precious metal, the base metal, etc. Because understand that all these commodities, the metals are priced in USD. Okay, so if the dollar come down, okay, depreciate, then the price of the metal itself will go up. Okay, this is kind of the 101 relationship lah, okay, between the dollar, the prices and such. All right. Can. So another one that I want to share with you is actually the 30 years treasury bonds. I think last week? Yeah, last week I mentioned that the 30 years treasury bonds are based on the 10-year note is actually bullish in this month. So I'm also looking at the treasury bonds right now. So if you look at the 30 years treasury bonds, which is over here, all right, we are in a kind of a crucial area right now. So previously it was going up, and then it came back down. So personally, I took a trade on the TLT, that's the treasury ETF, the bonds ETF. So I took a loss because price actually came back down lower. So never mind. One of the losses that I made was just let you know that I can't win every single trade. So I make a loss on the TLT. But right now, I'm still looking at the TLT. This is the 30 years treasury notes. Just in case to let you know, this is the 10-year note. Later I'll go through TLT, but it is coming down. But we are at a support right now. So if price cannot go up in the coming days or weeks to come, then if price continue to go down, which means that it will bring some pressure to the stock market as well, because the price come down means that the yield is going higher, or yield is going higher, which if you go to the 10 years yield over here, which is the reverse of the note of the bonds, because they move in reverse tandem. All right, so reverse. So prior to that, the interest rate, the yield has been coming down, but in recent 2 weeks or so, it's been climbing higher. So we are at a critical point. So I have no idea, how the market is going to pan out. But personally, I still think that, it will come down like that. Okay, but if price still hover and stay above the central period range, there's a very high chance that price can continue to go higher. All right, then that will bring pressure on the stock market also, and also maybe on the EU also. Okay, so this is what I'm watching out. So personally for TLT, this is the 20-year plus treasury bonds. So yeah, I long actually somewhere around here. Yeah, then after that I came back down, I cut my loss, I exited. So but right now I'm still watching this. I think we are still at a support, and based on the seasonals, we are still at a bullish seasonals for the treasury bonds. So I'm watching out in the coming week whether price can continue to head higher. Okay, yeah, I will see how it goes. Can. And yeah, I think that's about all that I'll talk about. Yeah, I'm talking about the sectors and industry already. Let me take a look at the comments. Mark say XLRE improved this week because of the risk inflation rate has reduced. Yes, definitely. Okay, because when the interest rate, the inflation rate come down, the government, as in the US government, doesn't have to increase the rate hike so aggressively, then it will cause actually in fact all the sector industry to go up as well lah. All right, okay. If the inflation rate has peaked, this means interest rate will also keep pace and not increase. Yeah, this is what I'm sharing earlier, right? So if the inflation rate has came down, okay, even though I don't think you'll go back to that kind of 2%, 3% level so fast lah, okay, we'll still stay at elevated level. But as I mentioned, right now we are anchoring at this 9.1%, okay. So if this month, next month we can get below 8.5%, okay, then that will be also very bullish for the stock market as well. Even though, let's say for example, next month we are at 8%, for example, at 8%, okay, it is still very high. Just that it is, comparing to the July month, it is lower. So this is anchoring at the 8.5%. Then the market will continue to rally. But absolute number 8% is still high lah. We are going to stay high elevated until the end of the year lah, I believe so. All right. So any question so far before I end the session? So 1 hour and 10 minutes. Okay. So recap over here for the Nasdaq trading festival. We have this education series, okay, brought to you by Nasdaq also. So very simple. All you have to go to the link in the chat, okay, in the comments. You can also see the banner over here if you're watching the replay, marketwiseasia.com/Nasdaq. So I already posted the link in the chat box also. Okay, so you can see that all these videos, Royston Tan have some strategies on the options. So I will talk about the fundamentals of options. Okay, Tony Zhang from Options Play, some strategies as well, how to grow a small account, strategies for trading index options. All these are free. So can head over and take a look. And if you subscribe to the APEC Market Data News, just click subscribe. Okay, basically it's Nasdaq newsletter. Okay, you also get to have access to 2 additional bonus videos where they talk about the hedging of the options and also comparing the index options between the Nasdaq and also the S&P 500. Once again, I'll post a link in the comments. All right, if you're watching this on a replay, you can head over to this link over here. You can see marketwiseasia.com/Nasdaq. All right. So to bring the interest rate, Hongwen asking, to bring the interest rate down to their long-term target, hikes will still be needed until maybe a Fed-induced recession. Yes, so my personal opinion is that, when the market is still relatively hot and unemployment rate is still okay, everything is okay, right? I think, that's the role of the Fed, tame the inflation down when it still can, okay? So let me take a look at the, let me see. Okay, is it? No, let me take a look. This one, okay? So when they will still tame it while they still can. All right. To go at their target rate of about 2 to 3%, I think you have to wait until next year already. So they have to hike while they still can. So when the recession really comes on, then they have the bullets, okay, to reduce the rate again, the interest rate again. Because if they do increase right now while they still can, if it stay at 0% right now, when the recession really comes, right, then what can they do? They have no, monetary policy, which is to reduce the rate to stimulate the economy again. Right? Do you understand what I'm trying to say? So yeah, I mean they try to increase while they still can. That's the gist of what I'm trying to say. Okay. All right. So what is the market expectation on the next interest rate? 75 or 50? No longer 75%, okay, based on their expectation. So can go to this interest it's rate hike probability. I mentioned before, this is the CME one when they let you know the probability. All right, so we are still about 1 month plus before the FOMC where they decide on the interest rate again. So it is on the 21st of September, where the FOMC will come again and they'll tell you the interest rate hike again. So can you see right now, the interest rate, it is, I zoom in. Oops, not this. I zoom in. All right, so right now, the current interest rate is 2.5%. 2.5%. All right. So if they hike to 3%, that is a 50 basis point, that's 0.5%, correct enough. So it is kind of 50-50 right now. So the probability is 50%, it will hike. 55%, it will hike 50 basis point, BPS, okay? And there's a 44.5%, it will hike 25 basis point. So it's no longer 75. Okay, the target until the end of the year is about 3.5%. All right, so we still have three more rate hike to go. So 21st July, no longer 75% kind of expectation because the inflation CPI data has shown that it is coming down. So they are looking at even just a 25% rate hike. Okay, so is everything clear? So hope that gives you some idea what the Fed it is actually doing. So can you post the website address and post the link in the comments? Okay, so yeah, so Henry, I already posted the link again. So once again, just a very quick recap over here. The market, the gist of it for this session is that over here, okay, long term still looks good to me. Less than 1 year, price above the cloud, above the central period range for 2 consecutive months. But short term wise, as I mentioned, right, the market is really overbought. If you are riding on the profits, good for you. Hold your profits, show it, take some profit, whatever it is entirely up to you because you already have the profits. Okay, but if you have no position, okay, my suggestion to you is don't enter the market right now. Okay, it is very risky. And based on for example, the market, oops, I think the chart just now is gone. So based on the market breadth that I have mentioned to you just now, okay, the percentage of stocks above the 50 days moving average, we are hitting near the 90% mark. So based on historical record, when it hit about that level, there's a very high chance that the market will undergo a pullback. Okay, undergo a pullback. So yeah, that's the main thing that I need to look out for you. And for the ETF I'm looking at, okay, I think we can look at the financials, we can look at the retails, okay, we can look at the metals. These are the things that I'm looking at right now. Okay, so if you think that I'm providing good value, some good ideas to you, some knowledge to you, whatever it is, okay, you think it's good, I bring value to the table, right? Just type value in the chat box. Give me some encouragement, okay? Just give me some encouragement. Just Let me know everything is good, okay? And yeah, so I call it a day already. So yeah, I'll just take a sip of water. If you think everything is good, just give me a like, share, or comment, and just type value in the comments, okay? Give me some encouragement. All right, I think about just nice 1 hour, 18 minutes. I'll keep it less than 1.5 hours. So yeah, I think that's all for today. And thank you so much for staying with me throughout until the end of the session. All right, so I will see you again next week on Friday. And meanwhile, have a good rest and have a good weekend ahead. And I will see you very soon. Okay, bye bye.